Okay, hope everyone had a great weekend. Just want to do a quick mic check. If you guys can hear me and see the screen, can someone put a 111 in the chat? I just want to make sure my mic is working and you guys can hear me. If you can hear me and see the screen, can you put a 111 in the chat? All right, you guys can hear me. All right. Good, good. All right. All right, so how this call goes is I'm going to basically go over the slingshot strategy. We're going to talk a lot about liquidity. I'm going to go over open order analysis, and then I'm going to show you guys how we can use the boss money template to help confirm that analysis. Um, if people have some inquiries about the slingshot template as well, I'll put that on the chart as well. But hopefully you guys will get some good value out of this. I'm going to explain to you guys how to do top-down analysis. I'm going to explain to you guys how to analyze the chart from the higher time frame down to the time frame you plan to take your entry on. We'll talk about stop loss and take profit. But for the most part of this training is I want to, get you guys understanding how the market works so you know how to read it like a language. The market, honestly, what I show you today, if you're new to the call, will kind of be an aha moment to, what might be the missing piece in your trading journey, especially if you're trading US 30. All right. So first things first, let's go to a naked chart. All right. And
Megan,
basically what, I don't know why,
Megan.
but y'all supposed to be muted and you're not. So let's figure out why you're not muted. All right. Shouldn't be hearing people. All right. So let's not go to the naked chart. We're going to go to this chart here. All right. So what I want to explain to you guys about the market first and foremost, before we even look at a chart, is what the market is. The market is simply the banks or the algorithm, however you want to call it. I know some people like to just call it an algorithm. I like to use the term banks because I feel like we are trading against the banks and hedge funds. So how the market works is on the chart, what you're seeing is you're constantly seeing the banks take and create liquidity. And that's basically all they're doing. If you don't understand what liquidity is just basically traders who are trading, in the market. You make the small guys, like me and you, the retail traders who are trading. And basically what those traders are doing is when they place a trade, they'll protect their money by putting a stop loss, either, above their buy or above their sell. And that's leftover money for the banks to take to actually move price. The banks don't move price with their money, they move price with retail traders' money. And basically, you're just a sitting duck waiting to be plucked if you don't understand what phase the market is in. Now, what I mean by the banks taking and creating liquidity is just this. If you do know what a downtrend is in a downtrend, you should know if you have been trading for a while or, at least, just getting into trading and know the basis that the market is making a lower low, a lower high, a lower low, a lower high, and a lower low, right? And that's what the market is doing in the downtrend. Now, every time the market makes a lower low, that is the banks taking liquidity. Now, the reason why I say this is where the bank is taking liquidity is because in a downtrend, we do have, what we call a retracement or a pullback. Now, this pullback occurs because price runs into a level of support. And I think there should be a line right here, right? Price will run into a level of support. And what a retail trader will do, because what they're taught to do when they first start, learning to trade is to trade off of support and resistance on lower time frames. They'll see this level of support and they'll buy, but they'll buy against the trend. And what happens is it produces a pullback. Now, in this pullback, the market will pull back in what I call a higher high, higher low formation. You're going to see a mixture of bullish and bearish candles in the process of this pullback, depending on the time frame you're looking on this pullback. So this whole pullback is going to be um, a draw on price. There'll be liquidity inside this pullback. Now, if the market is in a downtrend and a buyer buys off of this area of support, thinking we're either going to get a reversal, he's just hoping to get a quick scalp, the algorithm or the banks know that there's money below this low, but they also know that there's money within this pullback. And all that is fueling the move to the downside, because once price hits a level of resistance, right, then the banks are going to come into the market, enter in this area, and what they're going to do is they're going to start pushing price to the downside, taking out all the liquidity below each one of these little peaks, along with the liquidity at this area of support. So your goal is going to be is to identify what phase the market is in. So you know, okay, well, if the market overall is in the downtrend and I'm trading here, I better not try to go up here. I better try to trade toward here, because here is where the money is. And at some point, we are going to feel some imbalance, and there's going to be an opportunity to trade with the banks and trade in the direction of the trend, which is a higher probability trade. So in actuality, what you're looking at on the chart is you're looking at the market doing exactly what I said. The market goes into a push phase. We take liquidity. We trick buyers into buying, right? We create liquidity. And then we go back into a push phase to take what we just created. And we want to be trading where we're taking what we just created, right? Push phase, we take liquidity. We create liquidity. We take liquidity. Now, it's the same exact thing in an uptrend. In an uptrend, the market makes higher highs, higher lows, higher highs, higher lows, higher highs, right? So if the market makes a higher high and we run into an area of resistance, just the total opposite. Retail traders are going to trade off that area of resistance and they're going to sell, right, against the trend, right? And if they sell against the trend, right, they're going to leave money above the high to protect their money. There's going to be money inside this pullback, and in this pullback, the market will pull back in a lower low, lower high fashion. And each one of these peaks, they're going to be money, right? So this could be a take profit, that could be a take profit, that could be a take profit. But the goal is to get above this high to continue price pushing to the upside. So if there's money above this high, right? If there's money above here, and we know that the market is not going to reverse, right, and continue, and we know it's going to continue higher, then we're going to seek out an area of inefficiency or an area of support that the market might have bounced off, in the past off of, in the past to go bullish, and we're going to enter here. Now, when we enter in this phase, we're entering in the phase where the bank is going to do what? Come up and take all the liquidity out of this area of the pullback and what's above here. Once the bank takes the money, the next phase, create liquidity again. There'll be money above the high, right? Banks will enter below here and just keep taking the money. And as you can see, that form of price movement creates that higher high, higher low formation, which is your uptrend. And what a lot of people don't realize is you can identify that on the chart and make a better decision on where to place your trade. That's why a lot of people who trade the breakout right here, sure, if you're on a high enough time frame, you can catch a nice trade. But a lot of the times, if you're looking for a take profit down here because you're greedy and you don't want your 10 or 15 or maybe 20 pips, what happens is you go into drawdown, right? Because the market pulls back, because the next phase is to create liquidity, right? And then you're too scared to enter the trade once you see it starting to push back down. And a lot of times, by the time you do it, you're already in a push phase, getting ready to break this, or the market is coming to this area of support and it does this to you, right? Because like I said, the market pulls back in a high, 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 low formation. It pulls back again, and now you're scared or getting stopped out. And then all of a sudden it tanks on you because now there's money here and money here for the bank to take. And it's just the way the market moves. It's very manipulative. All right. So that's the first thing you have to realize about the market is it's all set up for you to be confused. All right. Now, what I mean by in these pullbacks that the market pulls back in a higher high high low formation. If you look at the chart, you'll see that it's not just bullish candles in the pullback. It's a series of candles. You're actually going to see price move significantly to the upside, significantly to the downside, significantly to the upside, failing to break this low here. And in the process, it will hit an area of resistance, and then it'll leave all these little peaks. And that's what I mean by orders being created to fuel this move to the downside. And I'll show this to you on the live chart. All right. Now, how I like to mark up the chart when I'm identifying this is I like to mark up what I call a break of structure. Now, the break of structure is basically when price takes liquidity. And once price takes liquidity, we can see where the break of structure is right here. So right there, I would write BOS, right? Just for break of structure, or you can call it change of character if the market is reversing, right? And then when you do this, you're going to want to identify both ends. You want to identify the buyer and the seller, and then you want to identify who sold, right? And who got taken out. And as you can see in the downtrend, if there's a break of structure to the downside, buyers got taken out. So now you've identified the buyers. Now, we do know that after the market goes into a push phase and we take liquidity, we're expecting the bank to do what? Create it. Now, once the bank creates liquidity, below this low is what I call an RTP. And that's just a reason for the market to push, a reason for actually RTD, a reason for the market to drop. This peak right here and everything that's in this pullback, right, is my reason for the market to drop. Then I identify inefficiency, which we'll talk about a little bit later, or an area of resistance for the market to stall at. You'll see rejection in this area, maybe multiple areas of rejection. And then you'll look to enter the trade toward that liquidity. Now, this pattern that looks kind of like, a little spaceship, right, is what you want to be able to draw. So you have an idea where the market is going and why. All right. Same thing to the upside. We have a high, a low. You identify that break of structure, right? This will be your BOS, right? Above this high would be your RTP this time because that's a reason for the market to push. We know that once price breaks structure, the next phase is for the market to create liquidity. So if the market creates liquidity, we know that there's a reason for the market to go higher than this point, as long as this area of support does not get broken when the market pulls back. Market pulls back, banks will enter here. You identify your buyers and sellers, and this time you can see that the sellers got stopped out by this push, right, to the upside. And now what we're going to do is we're going to continue to take out sellers as the market continues to the upside. And this is the pattern that you want to see to the upside. You want to see a high, a low, a break of structure, the market pull back into an area of inefficiency or an area of support, and then you look for an opportunity to enter the trade toward the orders in that pullback, right? Same thing here. If you were to look at it, in this type of price action, the same exact thing, all right? It'll look just like that. There'll be your orders here, higher high, higher low formation. There's going to be money above this peak, money above that peak, money above that peak, entry down here, which fuels this to go higher, all right? Same thing here, right? Low, high, break of structure. Next phase, we're going to trick buyers into an area of resistance. And then what we're going to look for is an opportunity to enter the trade from, a discount toward each one of these peaks to continue price to the downside. All right. Now, this pattern is what I call my slingshot pattern. This is what I look for on the chart to get a direction. All right. Now, what I'm going to show you on the chart is examples of this so you can kind of get an idea of what I mean by the banks taking and creating liquidity. So let's go to a naked chart and we'll go to US 30. Move this up a little bit. And then we're going to show this to you on, I want to show this to you on a higher time frame. Like, well, let's go to the 4 hour. Let's see. Yeah. All right. Now, if you're looking at the market, let me see if I can zoom in so you can see it because this downtrend is kind of ugly, but or actually we'll look at yeah, this price action is just not giving me the best examples, but all right, I'll tell you what. I'm going to show it to you on the daily first, and then I'm going to show it to you on the lower time frames, just so you guys can get a really good view of what I mean. All right. So I'm going to show it to you on the daily, and then we'll work our way down to lower time frames because I just want you to see like this pattern works on every time frame. So you can actually use it to get a directional bias as well, right? So let's look at the market in this leg right here, all right? We're in this downtrend, right? Now notice we have each one of these little peaks, right? We have this peak, right? We have this peak, right? And then we have all these little peaks in between, right? So if you look at the market on the daily time frame, notice the market made a lower low, right? It made a lower high. It made a lower low that failed to break this low, which means there's what? Money below here, right? It continued to make a high, failed to break this high, right? So we know that if the market made a low and the market pulled back, these are buyers that are buying against what? The trend, right? So we know where the money is, right? We know that when the market went to the downside, this was the bank taking liquidity from these buyers, right? We know when the market pulled back, it created liquidity below this low. And if it never reached this low, we know that there's just continued leftover money. So let's draw the pattern that you can see based off of what I just showed you. All right. So notice we have a low, we have a high, and we have this break of structure, right? This break of structure did run into an area of support, as you can see the rejection here. So what is the next phase? The next phase is for the market to do what? Create liquidity. And as we said, the market creates liquidity in a what? A higher high, higher low formation, right? It ran back into an area of resistance, right? So notice the pattern, all right? Low, high, break of structure, pull back, we identify the money, right? So right here is where I would write BOS, right? Write this in black, right? And this is just me showing it to you on a large scale, all right? And then below here, this is our RTD, right? And then right here, let me get rid of this line. Right here would be our area of resistance, right? And usually what happens is the market will pull back to an area of resistance, feeling some form of inefficiency, right? If I go to the 4-hour time frame, we can kind of look and see, was there an area of inefficiency for the market to fill in this area? And as you can see, there was inefficiency here, inefficiency here. You know, the market did pull back into an area that needed to be filled, right? So now, where do you think the market, where do you think banks entered to trade towards these orders? They entered up high, right? Notice if I zoom in on it, right? We have an engulfing candle here, right? Signaling price wants to go down. Market does pull back, fails to break this high, leaving money here, here, another opportunity to enter the trade on this candle here, right? So this is what I mean. Look how the market works. There's money below each one of these pullbacks, right? And then the bank trades toward the pullback, and then it's the same cycle. Once the bank takes out liquidity, right, it takes out this order, these orders, all the orders to the left, right? You can consider this another break of structure. What is the next phase after the bank takes money and runs into an area of support? To create liquidity, right? And how does the bank create liquidity? The bank creates liquidity by doing what? In a higher high, higher low, higher high, higher low formation, which does what? It leaves money below each one of these wicks. All right. Right. So this is what you have to understand about the market, is that it's simply made up of the banks taking and creating liquidity. Now, this is me showing it to you on a large scale. So imagine if you understood this on the higher time frame and you were able to take a trade based off of what you know about liquidity, and you can just take this and hold like a huge swing trade if you had the mental capacity to hold that. I don't, but it's possible if you trust what you're reading. All right, so this is me showing it to you on the daily time frame. All right, so I'm going to show it to you on lower time frame so you can get an idea of exactly what you are looking for. All right, so look at this in this uptrend. This is from the daily time frame. So imagine if you came to your chart, you knew that the market broke structure. We knew that it ran into an area of support and a pullback was coming on the daily. So we know why we're bullish, right? Now look at the patterns that happen on the 4-hour time frame, right? The market makes a high and then it makes a low, right? So this high, look what this high does. This high breaks structure, right? This high goes above all of this price action. It actually goes above this price action as well, right? Goes above this. So technically, depending on when you come to the chart, there's your high, there's your low, here's your break of structure. That wick, it wicked above that high, that's still a break of structure or change of character because we are kind of reversing, right? Me, I don't really look at um, this technically unless I'm doing order flow, but as you can see, I could just mark this as my break of structure. We clearly took money from a bunch of sales out of consolidation. So I'm going to mark it like this, right? There's no reason to sell, to buy because we're in a push phase. All I'm going to simply do is wait for the bank to do what? Create liquidity, right? So after the break of structure, right? After the bank takes money, the next phase is for the bank to do what? Create money. And as you can see, the market does what? It pulls back into an area of support. So if we were to mark this up, this would be your BOS, right? If you want to be a little bit more technical about it, you could say it's way up here at this area because technically that's where it is, right? And then what is the next phase? Trick buyers back into an area of support, filling some inefficiency, right? Or running into an order block. This is the last down candle before the breakout. As you can see, that wick came into the closer to 50% of that candle. And then what's above this wick? Above this wick is your RTP, your reason for the market to push, right? Now, we do have a gap here, so it's just not sure why we have a gap right there. I guess I don't know what day that was, but look at how this works out. Let me just show you the pattern again, all right? To the upside. High, low, break of structure. We marked it, RTP back into an area of support. RTP is above this high. We enter down here, market goes up. All right, look at the diagram. High, low, break of structure, next phase, trick. Sellers, RTP, where do we enter? We enter right on this candle. Boom. Right? Where does the market go? It goes up to take out the order from the retail trader who sold off of this area of resistance. Now, when you're analyzing higher time frames and you see this scenario play out on the lower time frames in this area, where you're going to be looking to enter your trade toward this order long term. All right. All right. And as you can see, this whole process plays out. The market actually kept moving to the upside, right? Until we eventually did what? Created more liquidity back to an area of support. So as you can see, I can redraw this, right? Because the market did continue, right? We never broke below these lows. So technically, we have the same patterns happening up here. If I wanted to redraw it on this time frame, all right, we have some consolidation here, right? Break of structure, right? So we have a high, a low. This push to the upside is another break of structure, stopping out sellers. What is the next phase? We trick sellers back into support, right? There's money above this high, right? Market comes up, fails to break. We pull back, still failing to break below this low. Back to your area of support. So now we have money here, money here. Where's your entry? Somewhere on the push of this candle on the lower time frame. And as you can see, market takes out these orders. And then it just keeps happening. And like I said, the market is manipulative, right? It does it again. High, low, break of structure. Now there's money here and here with inefficiency down here. What does the bank do? Trick sellers back into an area of support, filling inefficiency. Now there's money up here. What does the bank do? The bank travels to the upside to take out all the liquidity. Now remember what I said, market pulls back in a lower low, lower high, lower low formation. So there's money above this wick as well, right? So as you can see, the market comes up, it stops out all these sellers, manipulative as it can be, fails to break that high, pulls back again, never breaking below this low. leaving money above this high, this high, and the leftover money here. And then look what happens. And this is why people lose, because of moves like this, right? Then the banks take out that money, all right? That's how the market works. In this example, this is ugly price action. US 30 is moving pretty weird because of all the FOMCs. All right, but that's how the market works, guys. Even in the tedious of price action, like even in this little tedious form of price action, it's happening right here in this downtrend. Like if I zoom in on this, you can see that there's a low that gets broken, right? There's a low, there's a high, a break of structure. Next phase, look at the bullish candles, right? There's money below here, here, and here. Look at the rejection. The bank takes the money. When the bank takes the money, look at the bullish candles. They just keep doing the same exact thing, even in the tedious price action on the higher time frames. Look, if I can move that over. All right. This wick went below this, stopping out these buyers, right? So now we have a little pullback. You see the rejection? That means there's money below here. Look, they take out the money. They go lower, and they just keep doing the same thing over and over again. I can put that there now, right? We have a low, a high, a break of structure. Look at the bullish candles. There's money below this wick. The bank takes the money. That's just how it works. And you just have to be able to identify those phases. Right now, these are on a higher time frame, right? You can do the same thing on the lower time frames. All right. It's just all about what you see. All right. I'm going to get into it a little later on, but today's trade. All right. Look how the market works. All right. We have higher high, higher low, higher high, higher low. All right. So look at this price action right here in the 15-minute time frame. All right. I'll zoom in on it. All right. This is probably during Asian. Right. The market pulled back, a group of sellers, right? And then we have a push to the upside. That is the bank taking liquidity from the sellers. Now what I can do is I can find a mixture of sellers and buyers, right? Just like the diagram. Sellers, buyers, all right? So here are the buyers. The buyers bought off of support. So it's the same exact thing. Look, BOS, right? Next phase, we're not going to chase this candle. Next phase, trick sellers back into an area of support, filling inefficiency. And there's an order block here. You see there's a gap here. So we have inefficiency in between this gap that gets filled. This is your RTP above that high. That's your reason for the market to push. And then your entry should be below the RTP, maybe on this candle. And as you can see, market goes out to take out the RTP. And then even after it takes the money, look at the bearish candles. They go create some more money. RTP, entry, right? RTP, there's a bearish candle here. That's another break of structure, right? Look at the pattern, right? Next phase, trick sellers, right? RTP, entry. And that was today. That's how you could have gotten today's trade. The bad part about it is because of all I saw this entry right here, right? And smacking myself in the head. I saw this entry right here, did not take it because of all the FOMC news, right? Because this would have pissed me off. I would have been in deep profit, and then the profit came right back here. And I actually saw this wick and didn't enter. I entered somewhere way up here, and that's how I got into the trade today because the news was freaking me out. I was like sick of it. But I saw this entry right here, didn't take it. Didn't take it because of all the news. All right. But do you see how the market works, guys? Right? It's just a vicious cycle. It's not going to be as clean as these diagrams. So you have to really pay attention to what you're looking at. When you see the market break above a high, understand money has been taken, right? When there's an impulsive move above a bearish candle, money has been taken, right? If you chase this, you'll go into this drawdown until it takes off, right? That's how the market works, guys. Right. So that's the slingshot strategy, right? And the reason why I call it slingshot is basically just this. The market is basically setting you up just like a slingshot. You have that high, that low. This move to the downside is you pulling back your slingshot, and then right here where you enter the trade is you letting go, and then boom, blast off. That's why I call it slingshot, guys. All right. All right. So hopefully you guys have a better understanding of how the market works. Now, like I said before, the market shows you these patterns on all different levels. It's going to show it to you intricately in this price action on lower time frames, and it's going to show it to you overall on these big swings, right? On the lower time frames, right? If you look at these swings, right? We have a swing here, we have a swing here, and we have a swing here, right? This is a high, a higher low, and a higher high. So imagine me just looking at the market, right? Based off of those swings to get a direction of bias. All right. Now look, this broke below all of these lows, stopping out all these buyers. So I have a mixture of buyers, sellers, break of structure, and we are in an uptrend, right? So where is the money at? I know there's money above these highs, and I know we just had a break of structure, right? So if we had a break of structure here, right? Then what am I looking for? And honestly, let's redraw this, right? Right there, right? Let's do it this way, just so I don't confuse you guys. Like if you're in an uptrend, right? So we have this high, right? We have these lows, we have this break of structure. The market did pull back, right? And then what is the next phase? The next phase is to do what? Create liquidity by tricking buyers, but we're going with the trend. So what is above this high? RTP, right? There's your RTP, right? And actually, yeah, this is an area of support, so I'm right. Sometimes hard to look at, right? So if I know that there's money above here, what did I say these pullbacks, how do these pullbacks form? In a lower low, lower high, lower low formation, right? So not only is there money here, but there's money here as well. There's inefficiency for the market to go to the upside, right? So we know that there's a reason to get into this trade long term above this high, right? And then in the process of getting up there, the market is giving you those same exact patterns to get into the trade, right? Higher high, higher low, higher high, right? Higher low, and then we had a break of structure here. Same exact pattern is forming. Look, in here, high, low, break of structure. What's the next phase? Trick sellers back into an area of support. We're failing to break this low because the market does do what? It pulls back in a higher high, high low formation. There's money above this high, and then where's the leftover money? Here and here. As you can see, where's the bank go to take out that money, right? That's how the market works, right? Now, this is just me showing you, you know, how you can, identify what phases the market are in, so you can make a better decision on, where the market is going and why. All right. One more example in this downtrend would be this: move to the downside, low, high, break of structure. What is the next phase? To trick buyers back into what? Area of resistance. And remember what I said, market pulls back in a higher high, higher low formation, leaving these peaks of money. Now look at the diagram. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. We never break structure below this low, which means that there's money here, and actually it's equal lows right here, 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 and then we're trying to get to here. So if we enter up here, look what the bank does. Takes the money, takes the money. Now notice when it gets right here, and I want you to see this, right? Just so you can see how detailed this is, right? Notice when the market gets, because see there's a pullback right here in a wick. Notice when the market gets right here, I even drew a line through it, right? From here to here, right? You see how it took the money from these buyers and then pulled back again? See the wick? Took money, creates money. Market comes down below this low, right? And then look where the bullish candle comes back in. Takes the money, creates the money, right? So there's money here. We pull back, we create money. We take money from the top and the bottom. There's money here. The bank takes it until it decides to pull back again and create more money. And as you can see, we pulled back right here, and look, higher high, higher low, higher high, higher low, higher high. failing to break above any of these highs, which leaves what? Money here, and money here. And then where's the bank enter? Way up here. And what do? They take the money, they create more money, right? And then, as you can see, it took money from them and them, but didn't take this. So they create more money, they enter up high, and they take the rest of the money. Boom. And then they take the money. And then it just keeps doing it. See? Money here, entry here, drop. Pull back, money here, entry here, drop. See how that works? So all these, crazy patterns and trend lines that you're looking, you're trying to identify on the chart mean nothing if you don't understand liquidity, guys. Means nothing. All right. All right. So now, using the system along with that type of process, you'll see that the system will pretty much agree with your analysis if you're able to analyze a chart along with the system. So I'm going to show you an example of that. All right. So this is US 30. We'll go to a higher time frame, like the 4-hour. And I'm just going to kind of give you an idea. Now, the way this worked in this price action is a little iffy because of the way the market was moving. But I'm just going to show you what I mean by how the system can help confirm analysis based on what you see on higher time frames. All right. So we'll use something current. Let me go to the 1 hour just to make sure that I can actually see something where we're going to get a nice signal. All right, we'll see one here. All right, so here's an example of it going against the trend. All right, markets are higher high, higher low, higher high, and we have a break of structure right here. So if I see that the market has pushed to the upside, leaving all this inefficiency, and I can draw this pattern, high, low, and I see that we have a break of structure, if we run into an area of resistance, this can be an area of interest where I could look to sell short term. I know we're in an uptrend, but say I just wanted to get a quick scalp and I mark that as an area of interest. I'm going to take this same price action to where the system is. I'm going to go to the 1 hour time frame, and it kind of defeats the point because it's actually showing me that there's an arrow right there. But in real life, there's not going to be an arrow there. So let's show you. Let's look at it on the 4 hours. There's probably no arrow right in that area. Well, go figure. There's an arrow there too. What the fuck? All right. So bad example, but we'll use it anyway. All right. So look, same area, low, high, break of structure. I would mark this as an area of interest. I would go down to 15-minute or 5-minute time frame. Hopefully it's not too far away. And then technically there'd be an arrow there, right? And this would be my opportunity to take the trade above this high. Notice that we are above the channel. You could go to the 5-minute time frame for a better entry. All right. We have our arrow, and now we're going to look for our confirmations. Now, if you're new to the system, because I really didn't go over it because you should have watched it in your videos, here is where I would draw that vertical line. Right. Make this a color that you can see. Right. And then for confirmation, basically, I want to see does the system agree? Do I have a close below the moving average? And has the moving average turned black? And then what I'm going to be looking for is the stochastic to be overbought. I want to see if there's a bearish spike if we aren't trending. And then I want to see is the white line above the red. If I have all three confirmations, I'll place the trade. And if you're looking to scalp, I'd place a trade for 500 points. As you can see, just in that push down, you get 500 points. If you understand liquidity and know where the money is, we know there's money below these lows. You can literally just make that first low, you'll take profit. And as you can see, if you enter the trade there, that'll end up being 2,200 points, right? And that's how the system can help confirm analysis. I'll show you another example of it on something a little less, actually something going with the trend. All right, so the price action in US is pretty ugly this week, so bear with me. All right, so here we got the market making higher highs, higher lows, high, low, still failing to break this low. And then right in this area right here, we have break of structure, right? Next phase, we trick sellers back into an area of support. And then from here, we go to the lower time frame. Let's see if the system agrees. All right, so let's go to 15-minute time frame. Right? Notice we have an arrow in this area, right? Go to a lower time frame, see if there's a confirmation in this area. We'll go to 5 minutes. Right? Now notice we have an arrow in this area right here, right? And it's below the channel going along with my analysis. Notice this price action to the right, right? We have a break of structure above these highs. Next phase tricks sellers back into an area of support, right? I'll mark this out so you can see exactly what I mean. This is your RTP, right? Here's your break of structure. And then right here is the system agreeing. And this is why I say if you understand Slingshot and you use boss money, it's game changer because it gives you the signal. Look, there's your signal. Oversold. White line, not touching the red, but we do have a little bit of divergence here. We were below at this area here before the break of structure. That's fine. If I go to a lower time frame, like the 1 minute, I'm pretty sure this is going to be touching that red line. And then look, this is the first candle that closes above the moving average. Notice the moving average is yellow. There's your entry. You're going to enter the trade there. Stop loss aggressively can go below this previous structure or below the previous low here, right? Because this is where the buyers and sellers broke out of. So this would be the safe bet. This is your aggressive stop loss, right? And then if you're scalping, your first take profit could be this high. And as you can see, if you'd have gotten to the trade here, that's a quick 567 points, right? Now, understanding what the market is going overall from higher time frames, you would know to stay in this trade long term, right? And once you understand the open order technique, you'll be able to stay in these trades. But right now, I'm just kind of going over Slingshot so you can get an idea of how to use the boss money template and use it where you can trade a signal that's valid and not one that's just very random like these over here. All right. You see how this works, guys? And honestly, just like I said, the price action that's going on, it's very, very bullish and very, very volatile between this consolidation, this push to the upside. So you're not going to get a signal on higher time frames in this price action, but you will on lower. All right. I'm almost 100% sure on the 1 minute time frame that if I were to analyze the 5 minute time frame in this uptrend during this New York session, you can just clearly see where there'd most likely be a signal. All right. So 1 minute time frame, if I did use this scenario, this area right here, if I go to 1 minute time frame, then most likely should be a signal, right? See right there? See the arrow? Right? So you have, let me move this down a little bit so you can see it, right? We have a mixture of sellers, buyers, break of structure, next phase, trick sellers back into an area of support, right? And like I said, just like in the diagram, guys, the market pulls back. This is the 1 minute in a lower low, lower high formation, right? We had a push to the upside, stopping out these buys, but there's money above here, here, and here. Look at the arrow. The arrow is telling you that we're going to go up to take out the money above these highs. So for a quick 1 minute scalp, the top of this wick is your take profit. And then look at your signals. We don't have the spike because the data it only shows you the data from, just a few bars back. But as you can see, we are oversold, right? White line is basically touching the white. We do have a little bit of divergence here, so you can consider this a break. And as you can see, if you'd have entered on this first candle that closed above the moving average is yellow. This would be your entry. This would be your awesome stop loss if you put it below previous structure, right? And then look where the market goes. Market goes right to target, stop it, taking out these sellers, and these sellers. And then it just continues on to where it's going to go, right? So as you can see, the system does confirm, but you do have to have an understanding of, liquidity. So when you do trade a signal, you're confident in that signal, all right? You can trade this miscellaneously, but you're going to be trading it based off of probability, against or with the trend. But, wanted to just explain to you, how this system works and how, a lot of people have been successful with it, along with the slingshot strategy as well. All right. So before we move on, I'm going to open it up for some questions, and then we'll go on and talk about the analysis and how I do the open order analysis along with slingshot. All right. So let's unmute this. All right. I think you guys are unmuted. Does anybody have a question before I move on? Anyone? I'll look inside the chat if you guys aren't unmuted, because I don't know if this thing's unmuted or not. All right. Any questions in the chat? No questions. All right. Are you guys unmuted? Can y'all talk? Does anybody have a question? Anyone? If you can't unmute. All right. Let me see if I can fix that. All right. Try it now. See whoever couldn't unmute.
Yes. Hey,
right,
Jerry, Ron, I can hear you.
All right. All right. Did you have a question?
No, I just letting you know that now I can talk to you.
Okay. All right. Okay. No, nobody has a question. If not, I'm just going to move on. Anybody? Nobody has a question? Y'all all got it.
My question is going to be in later on, so please go ahead and continue, Jared.
Oh, I got something blocking my screen. I have no idea how to get it off. What is this? Connect AirPods. What the fuck? It's on my screen. It won't go away. All right, give me 1 second, because I don't know what this is in the right-hand corner of my computer, but how can I get that to go away?
Hey Jerry, I have a question.
Yep.
How do I guess the little scrolls that you got on your chart that shows you I guess the session that is in, how do you get that on there?
Shows you the session that it's in. You talking about the box?
Yeah. Yeah.
You have to have the sessions indicator. I mean, just scroll. If I don't know what system you have, because it wasn't in every system, but if you have the session indicator, you drag that to your chart, and then you just pick what session you want. I trade New York, so I usually have New York set to one of these light colors, and then I make these none because I don't care about Asian and London session. So look for sessions underneath your navigator. I'm about pissed off. I can't get this thing off my screen. I can't figure out why this is up here.
Okay, thank you, sir.
But yeah. All right, I guess I'm just gonna have to leave it there because I can't figure out why I can't get it off. What is this in the right-hand corner of my computer? All right, well, we're gonna have to work around it. All right, so let's talk about open order technique so you can understand what this is. All right, so open order, I know you heard me talk a lot about that. This is a new way I start analyzing my chart. I honestly didn't get it from anywhere. I'm pretty sure it's probably been taught, so I'm not going to say I own it, but it's just how I started to look at the market because we do trade based on liquidity. So what I wanted to do is find a way that I could see where all the closed orders were and where all the open orders were, which would give me a better idea of where I think the market is going to go based off of the session that I trade and based off where price currently was when I came to my chart. All right. And hopefully this will give you some insight. I'll try to show you as many examples of it as I can and give you explanations of why the market moved in that direction. Today, honestly, was a good example of it. So hopefully you guys will, get a good understanding of, how I saw the market today. All right. So basically what the open order technique is like, just as I said, we want to be able to mark up the chart where we can block off all the orders that have already been closed and then identify where the open orders are so we know where the market should go. So if I go to a higher time frame, like the daily time frame, and I can just say I started here, right? I can see why this leg to the upside has happened by looking at where all the closed orders were when price was down here and where all the open orders were. And by simply, all I have to do is to see, okay, well, if price came all the way down here, that means everything inside of that leg got closed. If I draw a line from, say I drew a line from here, and and it's funny because I almost feel like if you know this line when you draw it, how you can tell if it's completely straight because there's no kinks in it, right? So if I draw it like this, right? Or if it's way down here, right? Or if it's down here, right? I can tell that I can pretty much leave it like that. And I can understand that this is not lower than this price action, right? So everything inside here is a closed order, right? Closed order, closed order. Anything inside here, all of it is closed. Because if these pushes to the downside didn't close it, this one sure as hell did, right? So if we did run into an area support and I start seeing bullish pressure, then I understand where all the open orders are outside of this area right here. Now, we know that the market came down in a lower low, lower high formation. So if I go to a lower time from like a 4-hour time frame, right? And I saw that the market was consolidating in this area. Even in this area here, I can identify where there's open and closed orders. Now, I'm not looking to take a trade to the upside until I get a break of structure. And as you can see right here, we did get a break of structure. So immediately I can start identifying closed and open orders just based off this push. So if I draw a line, let me see if I can zoom in on so you can see it. So if I draw a line from here to all the wicks that this thing went above, now I know that everything below this red line is a closed order, right? The money's already been taken. So where is the open order at? Basically where your RTP would be. There's your first open order at what I would identify, right? And you almost want to draw it like this just to leave a little bit of a wick at the top so you know this is your open order. Now I draw an arrow right here because basically I want to know that that's where there's money, right? So after this, we had this push to the upside. We know the market pulls back after the break of structure. We know that, right? But if we are trending up, right, we're not focused on anything below this red line anymore, right? Now, we do know that this line right here is an open order. We know this is an open order. We know that's an open order when it pulled back, right? But what are we doing? We're trending up. So these are open orders that the market is nowhere near. You see what I'm saying? So what if we're trending up, where are there open orders above this red line? Well, anywhere there was a pullback and a peak, there's an open order. All right, I'm going to show you. All right, there's an open order above that one. There's one above here, right? And as I keep looking, all of this, honestly, this whole leg is an open order, right? So there are areas of resistance that you have to look out for, which there is one right here. So I would honestly not worry about any more open orders until we break above this level. So these are my open orders, right? Boom and boom. So if I have a bullish bias, right? If I have a bullish bias, because we are making higher highs and higher lows, and I know that there's an open order down here, right? Down here, why am I not concerned about the ones that are being created down here unless, you know, we're hitting, volatile areas of resistance where the market can pull back and take out all these orders, right? Because like I said, the market pulls back in low high formation, right? So we know that there's orders here for the bank to take, right? And as you can see, we did have a pullback on this day. I don't know what day this was, right? But we did have a pullback on this day, and the orders have been taken. So we're not worried about this because we're talking about today, right? So we can clearly see that this has been taken. So I can literally draw a line from here above this one and pretty much just eliminate all the orders that were left over leading into the day. So right here we have an open order. So these orders don't even matter anymore, right? Because every time price breaks above and we're in an uptrend, Everything has been closed. So we have basically closed, still open, but we're not anywhere near that area. And then we have, what do we have? This went up above this area. So this is an open order that was left over, right? So that's money in the past left over. All right. So now look, we have this day, right? We can close out these orders, closed, right? Market pulls up on this day. This is Friday, right? And I'm trying to analyze, what this day is going to do. I just want you to see. Look, now we had on Friday, if I was reading the language over here, this closed out. Look at this. Zoom in on it. Right? This move closed out all the orders below. So it's a wick here, a wick here. So they're closed. So what's open? The money above here. Now remember when I said we're in an uptrend. So until we get a break of structure, I'm not worried about orders below here getting taken, right? So now we're in, the process of the New York session. We're right here, right? So I can go to a lower time frame. I can go to the 1 hour, and I can look and see over here in this price action what orders got taken and what order didn't. So I don't trade Asian, right? I don't trade London. So the market is over here somewhere, which means if we went up, what happened to the orders over here, right? Leading at the beginning of New York session, close orders, open order, right? So if that's an open order here, and I know there's an open order above here, and we're in an uptrend, and we're not showing any signs of breaking structure, where should I expect the market to go? I should expect the market to go up to take out what? Orders identified to the left and the orders here. And look what the market did this morning. Right? I'm gonna go that far back. Right? Look what the market did. I did say that this was an open order, right? What did the market do? It pulled back, right? Just like my pattern. And I'm still beating myself in the head because I saw this shit and I didn't take it, right? And I had this mark just like this. Here's my order. Here was your entry. Look, it took the money, right? It went up, right? This pushed up, right? And look what it took out. Let's see. Did it take out that order? No. Wait, did it take out that order? Yeah, it took out that order. So now there's money here. This is how crazy it is. Look, there's money above that wick. And then basically what's the next phase? Trick sellers, right? And I even saw this wick, didn't take the fucking trade. I still didn't take actually I didn't take it down here, right? And I saw this going up, didn't take it. Ended up taking it on here because I knew there was money where? Here, and all this money way over here. 4 hour. I guess I got to go 4 hour to see it. Over here, right? Above this wick, right here. So here was my take profit. Was actually my take profit was way up here. Ended up closing at this order right here. As you can see, that one got hit to the wick. Look at this. To the wick. I can't even zoom in no more. Look, to the wick, it took out all those orders to the left. And that's what I mean by open order trading is identifying where the money is, understanding the structure and what's logical. It just wasn't logical to take out the orders below. And everything above the red line that didn't get closed, look, it got closed. Everywhere there's a green arrow, the market came and took it. That's open order technique, right? So when somebody asked me, well, this morning they said, well, boss money didn't call that, and I'm like, okay, it did. It's just look at the price action. I mean, you're not going to get a signal in this until you go to the 1 minute time frame, right? So this is basically where the leg started right here. And you had another opportunity here. If I go all the way to the 1 minute time frame, look, arrow, it called it. It's just you got to know to go down there. If you absolutely need a signal to get into the trade, you see what I'm saying? Because somebody, if you're relying on this system without understanding how the market works, then you didn't get a trade today because your setup wasn't, you didn't see your setup on the time frame you wanted to see your setup. But that's how the market works, guys. is just the bank taking and creating liquidity. All right. We'll look at something else. All right. So you can just see that it's not just uh US 30. All right. You can do the same kind of analysis on a currency or Bitcoin. All right. So let's look at I'm gonna clean this up. And I'm gonna go to let's do I guess we could do GDP USD. All right. And then go to the daily time frame. And we'll just look at where the orders were closed and where the orders were open. All right. So we had this strong push to the downside, right? So from here, and like I said, this is the daily, so we have to do everything leading up to today's session. All right. So I'm going to do it just from the daily. Push to the downside. All right. Now, what orders did this close? We'll just draw a line, right? All the way across. Right. So that's an open order. So we'll just do that. So we know everything inside of here is a closed order now, right? So, I don't know what day this was. Doesn't really matter to me. We know that the market moved to the upside, right? So I'm going to go to the 4-hour now, right? Now, we had this push to the upside. So what orders were closed from this push to the upside? Let's draw a line, all right? That's so we'll do that. All right. So we know everything inside underneath this line is a closed order. So we know there's an open order above here. All right. Open order above here. Right. We're nowhere near there, but we might as well mark them because we know there's money here. Right. So we know that everything, all these orders were closed. Everything underneath here is open. And this move to the downside closed it. So let's draw a line from here to here. Like I said, we're leading up into this day. So we're just trying to figure out where the money was closed. All right. So right here. Right. So now we know that there's an open order here, right? Below this, right? We know there's an open order below this entire low, right? And if these are equal, let's just see if these are just to get tedious. If these are equal and they're not, this is lower than that. So that's a closed order. This is an open order. And these are closed. So now we're over here trying to figure out, what is the market going to do in this area? Because honestly, this is the New York session right here. So we got to go to a lower time frame to see it, right? So let's go to a 30-minute. All right. Now, we know that there is money below here, but what are we doing? We're trending up. So even though there's money below here, we're nowhere near. We're nowhere near this money. So now we're going to see where the closed orders are leading into New York session. Now, where's the beginning of New York session, right? Where I draw this line. That's the beginning of it, right? Now watch this. All right. Higher high, higher low. And honestly, it's like if you came to the market right here, you could already just draw it. Look, we closed, let's see. Did this go higher than this wick? No, it didn't. So, all right. So now we know where the open orders are and we're in an uptrend. Look how obvious this is. Look, I'll just mark it. Open order, this wick. Remember what I said, the market goes, it's lower low, lower high, lower low. So wherever there's a wick, there's money, right? Money. All right. Money, right? And we even just say on the top of this candle is money. We want TPs to get hit, so we don't want to be too extreme. So we'll just say above that candle, there's no wick there, but there's money right there. Now look, now it's time to kind of get an idea of, okay, where do you think the market's going to go? Is the market going to take out orders below here, or is the market going to take out money below here? What are the odds of us, going to the downside? What would make the market go to the upside? Well, inefficiency in price and structure, right? So notice during New York session, we get a push to the upside. So what is that? A break of structure. So what do we have? A high and a low, right? What is the next phase? To trick sellers back into an area of support. Now we have an order here, right? An engulfing candle. There's your entry. What does the bank do? It takes out all the orders. This one, this one, this one, this one. If I draw a line right here, they all get taken. See? All of them got taken. Now, why did I have a bullish, why did I have a bullish bias? Because the only way to take out the orders down here or to take out this order is to get a break of structure below this, and then another order be made to trade to here, to enter here, to go to the downside. And we didn't get that, right? We broke structure, we pulled back, we showed rejection, filling inefficiency. And it's just my same pattern. High, low, break of structure, pullback, entry, just like this. High, low, break of structure, pullback, entry. Toward what? All my open orders that I identified. You see how that works? Right? Now, if you came to the chart before this happened, then you analyze this part, right? There's an open order here. The only way for you to sell is if you do what? You broke the next structure, which, where's the next structure? Way down here. We didn't show any signs of coming way down here. So we got into the trade. See? Open order analysis into the New York session. All right? Let's look at gold. Actually, I don't want to look at gold, but well, you could look at gold, but today is not the best example for gold. All right. Bitcoin. This one was actually a really good example today. Damn, Bitcoin went way the freak up there. Almost 30. Damn. Damn. All right, well, let's look at Bitcoin. I didn't realize I was in this over the weekend too. Son of a, I should have stayed in that trade. Jesus. All right, so look at this. All right, look at this. All right. I don't know what day we want to do. We can do this day, and honestly, we could probably do this day too. But all right, so just look, all right, just look, because this one's just a given. You can see the pattern right here. Watch, look, higher high, higher low, higher high. Look, huge breaker structure. And honestly, we don't even need that one. We can actually just use this. Right? Look, high, low, break of structure, next phase, trick sellers back into an area of support. So this is BOS, RTP, entry towards the RTP, and then look at the orders. Look. And it's crazy because you can see all the open orders in this pullback, right? So if I draw a line right here, right? Everything below here is a closed order, that's an open order. Right? So we have lower low, lower high, lower low, lower high. So there's money here, 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 and here, right? And then leading into this day, look, we had a push to the upside that closed in order, right? We pulled back, right? So the only way for us to sell is if we get below this, right? We didn't get below that. So we pushed to the upside. There's your break of structure, right? Right there, right? I'm gonna zoom in so you can see it. There's your break of structure. What's the next phase? Trick sellers back into an area of what? Inefficiency and support, RTP open order here. And then what does this huge move do? Right? I just said there's money here and here. If you'd have entered here, look what the bank did, you know? Now I'll just draw a green line from here to here that represents all the arrows that I would normally have right there. Right? We'll just put a green line there. So those are the green arrows that I would put here. It's just too many to put. And look what the bank did. It took all the orders and then some. So you could have had TP right here. I don't know. Look at that. And look at the rejection. See how it takes the money, creates more money. Are y'all seeing that? Right? And if you wanted to, identify the open orders just, a little cleaner, all you have to do is just look at the biggest swing and then the reason why the market dropped. And I could just draw a line from this wick to where this wick doesn't close above something. So now sometimes you just got to draw a line. All right. So believe it or not, these little baby wicks right here are open orders, right? These are open orders right here. Everything below it is a closed order, right? Market pulled back in a lower low, lower high formation, right? So we know that anything in between here before we got to this day is a closed order, right? Just draw it into this doesn't close below one of these candles. So these are closed orders, and then just do this. Look, draw a trend line. See what I'm saying? What reason do we have to go to the downside? The only way we can go to the downside is unless we get a break of structure. We're moving to the upside. So where are the open orders at? Above this wick, that candle, that wick, that wick, that wick, that wick, that wick. And if we take one of these orders down here, it's definitely going to the upside. And this is the reason why you want to wait for a break of structure before you enter the trade to the upside, because say we entered aggressively here and the market decided to take out these equal lows. Now you're in drawdown or you're stopped out, and then it'll decide to come back up, play around, and then break structure, and then you could have got into the trade. Now I tell you that, and I'll still enter down here like a dummy. I'm not perfect, but do you see what I'm saying? This is Bitcoin, right? Now notice I'm using the open order technique, but I'm still using Slingshot for my entries. All right. Let's see something else. Let's look at GBP, JPY. All right. This might be similar to gosh, this one's still pretty ugly, but we'll look at it. All right. Look at the daily time frame. Ugh. We're sideways. I don't like it when it's sideways, but all right, whatever. All right, so we know that everything below here is a closed order. I don't know, like I said, I know it's a weekly time frame. Are we at all-time highs? Like, no, we're not. So we'd have to go weekly to really see exactly where. Okay, so we didn't break above any of this. All right, so we know that's an open order. That's an open order. We had this huge push to the upside. All right, so we'll call it that. So we know above here is an open order. All right, we'll go back to the daily time frame, and then we'll just kind of look and see what happened recently. Right? And actually, like I said, we're talking about this day. We're talking about this is today, right? So we're talking about that day. I'm just going to show you how you can just do it from the higher time frame down to the lower. Right? We're going to go to the daily, look at where all the closed orders are, right? Everything inside here is a closed order, and we went this way. Why do we go this way? Well, let's look at the lower time frame to see. All right, we went up, we broke structure. So look, close order, we're not worried about it because we don't trade Asian or London, right? Close order here, right? Push to the downside, this move, closed orders here. So we know that there's money here, and money above here. So let's mark them, even though, and then like I said, we have to decide on what direction we're going to go in, right? So there's an open order. We know everything above this red line is an open order, right? So look at the wicks, open order, right? The tops of the candles, open order, and the more arrows you put, there's the more strength the market has to go in that. Look, inefficiency, right? So we know there's a reason for the market to go up because of the inefficiency, right? And then now once you do this, leading into the New York session, draw your trend line. Look, all right? So we know in order to get to any of these orders down here, we have to see a break of structure, right? To get to any of these, right? And none of this has happened yet, right? So market goes to the upside. There's wicks here. And like I said, I mark everything. So I know we took money here, which means there's money above here now, right? Leading into New York session, look what happens, right? Where's all the money at and what direction are we going to? There's money here, money here, money here, inefficiency, and money up here, right? Market pulls back, right? So what pattern? I'm going to go 30-minute time frame. What pattern is happening right in between here? And this one's a little bit tricky because it's happening here and it happened overall inside here. If you can see it, we have break of structure above this wick. You have your low, move to the downside, RTP, your entry. Say you missed that entry because it's not New York session yet. Market goes up. This goes above the high. Look, break of structure, low, high, break of structure, next phase, trick sellers, right? Inefficiency. We're still trading to the upside. No breaks of structure have happened yet. There's no reason to sell, right? No reason to sell yet. Open order. Every time there's a pullback, I'm calling it an open order, right? Open order. Where's your entry? Look at all this bullish momentum right here. A lot of hesitation, but bullish momentum, and there's money above here. There's your entry. Somewhere in this area. I don't know what candle you would pick. Maybe you go to a lower time frame, 15-minute time frame. There's more data, right? So look, high, low, engulfing. There's your entry. Boom. See how it takes the money? Look, above the high, pull back, above this wick, pull back, and I'm pretty sure we'll end up above this high as well. Do you see how that works? All right. I'm telling you, just read the language. And once you find out where the leftover orders are, and you just use the concept of, okay, well, we are in an uptrend. There's no reason to sell unless we get a break of structure. My bias is bullish. Plain and simple. Find the open orders, guys. If this is confusing you, if your eyes can't see how to mark that, then you need to do your one-on-one. Because once you see it, you won't be able to unsee it. If you understand, liquidity, right? It doesn't matter where I go, where I mark it, right? Like if I draw a line from here to here, right? I know that everything inside this little area right here is a closed order. And where are we trending? Up. So where are the open orders at? Outside of this area behind it, here and here. So unless this breaks below all of this, there's no reason to sell. So where's it going to go? To collect the open orders. And the reason, and once it sells, the sell is going to clear these orders, leaving the orders here, 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 and here for it to take out if it's going to drop. Do you see that logic? Right? That's why I like to draw the trend line, because if it doesn't break the trend line and take sell side liquidity, there's no reason to sell. There's no reason to sell. And like I said, and understanding, what session you're in makes sense too, and your timing makes sense as well. Just like right here, if you were to do it over here and you drew a trend line this way, you can't buy, right? If the market is in this area, we just took buy side liquidity, right? So we just took this, right? So there's an open order here. It's not going to just take out that open order. It's going to come take out sell side liquidity because we're in a downtrend. If there's rejection, right? And then you would just draw your pattern. See, low, high, break of structure, back into resistance, money, take the money, right? So hopefully, you guys are getting a better understanding that. If anybody wants to see this on a certain pair, you can write it in the chat. If there's anything if you want to see how to do this on a pair that you like, I'll do it on a random pair as well. Does anybody have a specific pair that they would like to see how to mark up those open orders? Anyone? All right, I'll do EUR
Can you do gold?
I can do gold. Just gold's in a weird area right now, because it's so bullish right now. But I'll try and do gold. All right, so this is EUR USD. We'll go to the daily first just to kind of get an idea. And then it doesn't even matter because I don't even know what. Shoot. We're in a downtrend on EUR USD. So I'm saying, like, I think I remember calling this a long time ago. Long-term sell. You see this? Low, high, break of structure, next phase, trick buyers back into. I called this a long time ago. Should have been selling. All right, so it's probably going to come down here eventually because this is where your RTP is. Look, higher, high, higher, low, higher, high, higher, low. It's just taking out orders. All right, so let's have an idea of where we're going. All right, so let's go to the daily time frame, right? And actually, I'll get rid of all of this. I don't need this now. All right, we had this huge push. Actually, you know what? Let's go back to the. But I can't see if there's. I can't go any further back, but I'm gonna draw a line from here to here. And we're going to just say that everything below here is a closed order. Everything inside here is a closed order. This came down, stopped out all of this. This stopped out all of that, so we know it's closed. Not this didn't stop out this. This stopped out all of it. So these are all closed orders. We must have hit support down here, so we know the reason why we pulled back. We know why we went this way, right? Because obviously there was open orders here, open orders, open orders. This went up to this level, so this is all closed below here, right? So is that higher than this wick? No, it's well shit. Let's see. Yeah, so we know this is an open order above here, but we're nowhere near there. So, we can mark it for the future if you wanted to, but we know that's an open order, right? Above this high. Closed, closed, right? So now the market made higher highs and higher lows. So we know this is all open orders on this side of the market, right? Money there, money here. You see how the market went up and pulled back, went up and pulled back? This move closed all these orders. And wherever this one didn't close, didn't go past, right? If I draw a line from here to here, right? See how that is pointing, this is pointing down? That means that this was an open order. So in order for it to close, this price actually had to come below it and close it, right? So let's see how low this got. All right, so I'll draw a line right here. All right, so this move closed all the orders to here. So I guess this is equal lows right here or close to it. Let me see. And this is how tedious this can be. Actually, I'll just draw straight lines just so I can make sure that it didn't close that one. All right, so we're right on the tip. So this didn't close this wick, but it closed everything inside of it. All right, so I'm on the weekly. Gosh, I didn't realize I was on the weekly. Shit. All right, I thought I was on the daily. All right, so now we know where all the open orders are, right? All the open orders are above here. So let's go to the 1 hour so we actually see the day, right? So this is today, right? Market made a high or low. So look, all right, this wick is not lower than that wick. That's an open order. This is an open order, but what are we doing leading into New York session? We're trending up. So where are the open orders at based off of what we know about the market, right? Obviously, you can read this over here as well, because look, we went this way because we got a break of structure, right? Oops, I didn't mean to do that. Right? But here's that pattern, which is weird because this didn't really break above this candle right here. So that's weird that we went bullish, but that's okay. Right? So there was an order here, right? We moved up, right? And this is like I said, if you come into the chart right at New York session, right? So we moved up, and then look at this price action right here. Did this break above that wick? So let's draw a line right here just to double check. Yes, it did. So that's a closed order above that wick, right? So everything inside of here is a closed order. Everything above it is an open order. Open order. Open order. And this is open order as well. That wick on this candle. And then to get extreme, even though I wouldn't go to this TP, well, I guess I could have. Right. And then there's inefficiency here. So yeah, I would definitely, right, inefficiency here. So now look, now it's all about, okay, we're in an uptrend, right? We know that there's open orders below this, right? And it's weird because look at this candle right here. It looks like it's going to take out these orders, right? But we need to get a major break of structure. Equal lows right here. So that would be my area of support. Now look at the price action. And it's weird because technically your break of structure is this little wick right here. So I really should just be doing this. There's your break of structure there. This is your low. This is your pullback. Here's your support, right? Above here's your RTP. Look where the open orders are, right? Market comes down here. I'm not trading yet because it's not New York session. Market comes up. This wick breaks above that high. So there's your break of structure again. So actually, I just moved this up a little bit, right? There's your break of structure right there. Next phase, trick sells back into support. we don't break below this, right? We rejected it once, twice, another rejection here. So your entry, and honestly, you would probably mark this zone as your area of interest on a lower time frame. And you just got to remember where your open orders are, because now you got a better view of it. And this is sloppy choppy today, but as long as you understand, we cannot sell unless we get a break of structure. And it has to be a break of structure of something where there's a significant support. Support. If we don't get below where this line, there's no reason to go to these orders down here. These are all open orders in this uptrend, right? Because it's outside of those lines. Don't get confused about this trend line, right? Remember what we said, everything inside here is closed, everything over here is open, and we're trending to the upside. So we have to keep that bullish bias until we get a break of structure, right? So now we have a break of structure. We know there's an open order here now. Market pulls back. We get this huge engulfing candle. If you're aggressive enough, enter on this candle, on the push of this candle, or if you're on a lower enough time frame, like the 5 minute, you might have even seen it a little bit sooner, because the lower the time frame, the more data you're going to have. All right. So now you have an opportunity to enter the trade down here, or wait for a break of structure above one of these highs. That candle goes above that high. So you can say your entries here and remember where your open order is and get into the trade. You can trade towards that first open order. Don't forget about what you saw overall, because where are the orders at? Above the high, right? You can make any one of these your take profit. I like the yellow line. And as you can see, if you'd have got in down here, there's your only 27 pips. But if you stayed in a little bit longer, it's about 35 pips. If this is US 30, that'd be like 3,000 points. But that's EURUSD and the thought process to trade today. If you were going to use EURUSD, if that was a little extensive, I'm sorry, but I want you to be able to read it the way I read it. I would read it at the beginning of the day, right? And like I said, you see all these moves in between, right? I'm gonna zoom in on this, right? All of this in between, you'll see that this manipulation is going to happen. And there's orders down here. When this came down, these orders got closed in between here, right? Wick, wick, wick. But this never broke structure. And it's weird because if you see this, you'll consider this a break of structure, and it's not. It's the big swings. It's these that you have to focus on. These swings, not these little minor ones in here. You can't consider those a break of structure. And that's kind of an eye you have to develop. Because if you saw that, you would think this is a pullback and then you want to sell from way up here, thinking this is an open order and the market's going to drop. A lot of it too is really easy to understand, because if this is happening, the daily candle was bullish, the 4-hour candle was bullish, and most likely the 1-hour candle was bullish. There's no way that all three of those candles are going to flip to the downside. Just use logic. What I do is I look at another screen and keep the daily and the 1-hour on that screen, and I look at that candle, just so I don't even get that notion that this candle is going to flip on me, right? It's a support level, right? Rejection, rejection, rejection. Higher high, higher low, higher high, higher low, higher high, higher low. No breaks of structure. There's no reason to sell. We're going to buy towards the open orders. We're in an uptrend, right? We're in an uptrend. All right. So that was EURUSD. Hope that helped. All right. Hope that helped, so you can get a better understanding of how to identify those open orders. As you can see, if you look at the chart from where it's at now, this move to the upside closed all these orders, right? So now these are open orders. That's an open order. And now you just have to, decide on, how are you going to, what is the next move? And honestly, it's depending on what session you trade. The market can decide to take out open orders to the downside, to an area of inefficiency, to eventually go to continue to the upside to close all of this, or it will reverse. But you cannot trade a reversal unless you get a break of structure below something substantial, not one of these little baby pullback. It needs to be something substantial where you're inside a strong level of resistance for the market to move to the downside. All right. Which, the market just doesn't just reverse. Something substantial has to happen. All right, so that's EURUSD. We'll look at AUDUSD. All right, so let's look at this. I'll look at the weekly so I can get an idea of what we've been doing. And it's been bearish. What is all this? All right. So we've been lower, low, lower, high, lower, low. Okay, so we're bearish. All right, so looking at what the market has done, we got to look at it leading into today. So looking at the day time frame, I can't tell what's lower. Let me draw a line right here. Just that's all equal lows. All right, so whatever. All right, this stopped out all of this. All right, we're not lower than that. So everything inside here, underneath these little peaks, closed orders, right? So look at the market. The market's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So anything that we're going to the upside is a pullback going against the trend. All right, so let's look at the 4-hour time frame, right? And we'll look to see what orders were open leading into New York session, and we got to look at the past. So I don't know what day this was. I guess this is Friday. We closed orders, I guess, to there. We didn't get below this, but we did get below that. So that's closed orders inside here all around, right? So now we're leading into New York session. Let's go to 30-minute time frame, right? This is the New York session, right? And we know that we've been trending up. Highs, lows, highs, lows, highs, lows, highs, lows, right? So where are the open orders at? What was the highest peak? Actually, we'll do it from where the New York session started. Highest peak was right here. So what did this go higher than? It went higher than, did it go higher than this? All right, so it went higher than that. All right, so where are the open orders at? Right here. There's an open order there. Here. Here. Right? And then you can see there's inefficiency here. So there's reason for the market to go higher. So I'm going to say that I'm going to just draw a green line from here to here. This is all open orders. Above this wick is all open orders. All right. So we know that there's money there. And then what am I going to do? I'm going to draw a trend line. Because what we're doing, we're trending to the upside, right? So look, higher high, higher low, higher high. This is a higher low area of support. We got to close below this for it to be valid to come to where these orders. Because this is an open order, but we're not trending to the downside. So we don't care about these. We only care about those. So now it's all about how do you get into this trade, right? All right. How do we trade towards these orders? Well, it's all about when you get to the chart. So as you see, the market did pull back, but it didn't pull back substantially, right? So I probably, look at this as a consolidation and wait for a break of structure. You can go to a 15-minute time frame for a better view, right? And then what happens is, do we get a break of structure here? Can't tell. All right, we do get a break. We get a break of structure here. Very, very faint, though. We do get a break of structure there. Market does pull back. Remember, this is the reason why it's good to draw that trend line. Market does pull back, right? So we know that there's money above this high, right? And then you have to be thinking in this process, all right, I know that there's money below this trend line. So what does the market have to do to get to this money? It needs to break and it needs to retest an area of resistance. It needs to break structure. Didn't break anything substantial. This was a solid area of support, but it didn't hold, right? We pulled right back into support, right? So we had a rejection. That's honestly ammunition for me to go, right? Even right here, if I'd have entered here, previous structure is way down here to me, not this area. Previous structure is here. So if I'd have entered here, I probably went to some drawdown, or if you're waiting for the news events or whatever's going on that will hold you from entering these trades, I'm pretty sure the news event is the reason why there was a liquidity grab below this low, right? Enter the trade toward the orders. And as you can see, any type of entry in this area, the banks do what? They go up to take out the open orders. And depending on where you entered the trade, and where you pick your take profit. Honestly, I'd pick an area of resistance, and as you can see where that inefficiency is, there's an area of resistance here, and look where the market goes. It goes up to take out the orders. Actually, it went higher. Actually, went and took out that order near the inefficiency, right? And I think it's going to go higher. That's EUR USD. All right. And like I said, it's, and this is if you're going to be someone who's going to, day trade. Like this is how you trade that New York session is eyeballing it that way and just following the rules of this trend line. Drawing this trend line is crucial with this type of analysis, guys. I'm telling you, because if you sell aggressively, right, without understanding a break of structure, a close below the structure, and then an opportunity and then a reason to sell, you're going to get caught in that. You're going to get stopped out, because the market is it's not ready to reverse. And then honestly, this is all avoidable if you stare at the daily and 4-hour candle. Because what happened is that daily candle is doing this. It's doing that on the pullback, right? And then it's doing this. So, you eyeball that candle because if it looks like it's going to do this and flip on you, then, there's grounds for it to possibly reverse and start taking out these orders. But what really holds me from, trying to just sell aggressively because I see bearish momentum in this area and I'm scared it's going to reverse on me is looking at that daily and 4-hour candle to make sure that it's just, getting weak, collecting data to zoom up like it did on AUD USD. All right. Because a lot of this right here will fake you out just because of the fact that you're not aware of what's going on in the higher time frame or what candle is being formed. Because if this was a bearish candle, then I'm pretty sure it would drop. Or both, if the 4-hour and the daily candle were bearish at that time, then yeah, we would probably drop. But it was obvious that we were bullish and we were going to take out all the open orders that were left over. So this was AUD USD. Hope this helped. When you're looking for the open orders, as tedious as I'm doing this, that's how tedious you want to be about it. Use your crosshair and really make sure that, wherever that highest peak is, that anything that's left above that peak is an open order for the bank to take. All right. So that was AUD USD. All right. And then, like I said, if you wanted to see if the system called these trades, right, I'll even show it to you. Because I haven't really talked a lot about the system because honestly, once you do this, you won't even want to put the system on your chart. A lot of the times I don't even put it on my chart. Let's look. I mean, it's obviously it called it. We're below right here, but right here is where we'd be looking to enter the trade, right? If I go to 15-minute time frame, 15-minute, no, we'll go 30-minute, right? So there's no arrow here, right? But look, this push to the upside, like we said, left open orders, right? Yeah. So it left all these open orders above this line, right? We did pull back, right? So it's weird because if you look at this, there's your high, there's your low, break of structure, pull back into support, right? Low, low, all the open orders are above this high. And then right here is where we were looking for a signal. So if I go to the 15-minute time frame, look, arrows pointing in the direction of my bias. And we are above the 200 moving average. And even the white arrows are showing you where the open orders are, above the highs. So if you enter the trade, even if you entered here and your stop loss was in the appropriate place, you still win, right? We didn't really break any structures because even this, if you draw a line all the way across, look, this is where you got to really look. This comes down here, but look, we don't break below this, right? We reject it, that support level, and the market goes up, taking out the orders above those highs. So like I said, when you analyze a chart, the system's gonna agree with you, right? When we're above the 200 moving average, we don't care about the white arrows. We care about the black ones. All right. So that's that. All right. So hopefully you guys got a good idea. Somebody asked for GUR. I haven't looked at GER 30 in forever, but we'll look at it. This looks like it's similar to US 30s, but so daily time frame, and it's weird because I can look at this and tell I can already see the pattern here. High, low, breakup structure, next phase, trick sellers back into support. So it's obvious that we're bullish. So look, lowest point. Everything inside of here is a closed order, right? So we need to figure out how to get into a trade for today. I'll go to the 1 hour time frame, right? We're bullish. We came down this low during, I guess this is during Asian, right? Or London, I guess it's Asian, right? So beginning of New York session, we're in this area over here. So I'm gonna go to 15-minute time frame, right? Beginning of New York session is right here. So this one's tricky, right? So this is the beginning of New York session. So this is an open order. We know everything inside here is a closed order. We know everything outside of here is an open order. And then we have this push to the upside that closed orders to about there. So you mark out your open orders. There. There. And I can say up here as well. And then, like I said, too, identify, and this is what I didn't touch on this too, is identify what the market is doing too, right? Because technically, we've been doing lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? And we're in the process of making a higher low, basically, right? So, we know we're creating liquidity. So just keep that in mind. Don't forget what we're doing, right? Because this could just be a whole pullback leg to go lower. So, understand the phase of the market, right? So now, right, this is the beginning of New York session. What have we been doing? We've been bullish. So you draw your trend line. And where are your open orders at? Well, right here is where the New York Open starts, right? So we know that depending on when we come to the chart, all these orders right here have been closed. So here's your open order of this wick, right? That wick, anywhere there's a freaking candle top is there's money above, as far as I'm concerned, all of it. So this is an indices, so we're on a 15-minute time frame. So now it's time to distinguish, okay, where are the open orders and where's the market likely to take out orders first? Is it likely to take out orders below here, right? Or are we going to start taking out orders above here? What is the logical place? Well, we know this is the process of the bank creating liquidity. We know there's money above here, right? So what has to happen to take out any money below here? A break of structure, right? So look, higher high, higher low, higher high, higher low. Break of structure below this wick, but not below this area of support. Where's the market going, right? And you can pretty much, you can look at it and tell we're going to take out the orders above the high, right? Because once it pulls back, if it didn't break this trend line, we're going to get this money. So we have a bullish candle. We have a candle that closed above this high. Honestly, I'd probably enter on this candle. You clearly can see that this wick goes above that candle. That's a break of structure. So technically, we had our pattern right here. It's just on the 15-minute time frame, right? High, low, break of structure, back into support. If I go to the 5-minute, it'll look more prominent, right? And then you can enter here if you're, savvy. I'd probably enter over here because I'm aggressive. I would enter here or on this candle and trade towards the money because there's no reason for the market to start taking out orders from here. And like I said, in this process, what is the daily candle doing? Is it bullish or is it bearish? If it's bullish, it is not flipping to bearish out of the blue. It's just not going to, unless there's a news event, right? So we have an opportunity to enter down here or opportunity to enter here towards more orders, but we know where the market is going, right? So first take profit could be this high, second take profit could be this high right here, because honestly, this is the most prominent high. If I draw a line right here, look, smashed. You see what I'm saying? right? But I want you to know that everything above this line was money. Like you could have made the top of this candle here take profit, smash. You could have made the top of this candle take profit, smash. Do you see what I'm saying? See what I'm saying? Because the top of each one of these candles is an open order. Look how it rejects, pulls back, rejects, pulls back, rejects, pulls back, perfectly at the top of the candles. You see that? Right? It's like perfect. Right? So this is the thought process, guys. I don't know if this looks messy to you guys or if it makes sense, but what I want you to see is this too, is overall, right? After a break of structure, right? After a break of structure, next phase trick buyers. So look at it overall on GRUSD. Look what happens. Break of structure, right? Mixture of buyers and sellers. What is the next phase of the break of structure? For the market to create liquidity by doing what? Tricking buyers off an area of support when we're in a downtrend. Look at the green line. What is it pull back doing? Higher high, higher low formation. Look, higher high, higher low, right? Higher high, higher low. Higher high, higher low, right? Higher high, higher low. So we know what phase it's in. So there's no reason to sell until it does what? Until we get a prominent break of structure. And that's where it just gets tricky because like you could think this is a break of structure, but you have to look at support to the left. We got to break this and start trading underneath this for it to even come to these orders. Do you see what I'm saying? We're still bullish regardless. And these are the open orders. There's your magnet to price because these are the open orders. These everything inside the green liners are closed orders, and everything that's open is right here, but we're nowhere near there. We're going up. We're making higher highs and higher lows. Had we been making lower lows and lower highs and we saw these open orders, then it would make sense to sell. The manipulation is where they start, maybe taking out a couple of these open orders, but not breaking below areas of support in the past. And as you can see, the indicator will tell you, there's a support level right here. So if you're still thinking about buying, unless we break below this, we're buying off of this support, and there's open orders here. Market goes to the upside, right? And now, same area, we could put that with the system, right? Same area, and just do the same exact thing in that area, right? This is the beginning of New York session, right? We know that there's open orders above here and here. I'm not going to worry about all the stuff over here, right? Down here would be your area of interest, and then go to the 5-minute time frame. There's your arrow right there in your area, right? You want more confirmation, go to the 1-minute time frame. Look, there's your arrow, right? And then, like if you said, if you get down here enough and you follow the rules, you get the best risk to reward. Look, oversold, touching the red line, closure above the moving average, entry, stop loss, and then you just stay in the damn trade. You know what I'm saying? The system does agree. You see what I'm saying? We're above the 200 moving average. That's another thing too with the system. You're thinking about buying towards these open orders, right? And we're above the 200. That's a no-brainer. We're going up. We're above 200. You see what I'm saying? All right. Like I said, it's all about when you come to the chart. You could have came to the chart right here, and this is your open order. If you entered here, stop loss goes here. Even if it went up and came down, you're not getting stopped out if you put your stop loss in the right place. Previous structures here, you don't get stopped out. Right? So, that's it. I don't know if there's anything else. You guys, and if you guys have any other questions, but that's how the market works. Is the banks taking and creating liquidity, guys. Plain and simple. Can you show how to use the Moss indicator? What would be the best time to trade US 30? The best time to be prepared for US 30 is at 8:30. If you look inside your PDF file, there's a page that shows you best time to trade New York in the indices. I might be able to pull it up on my chart. Somebody asked about the Moss indicator. And it's crazy because this thing is blocking my screen. I don't know if y'all can see it, but I can see it. Let me see if I can fix this because this is getting on my nerves. Give me 1 second, guys, and I'll be right back. I gotta see if I can get this off my screen because I don't know why this is on here. Something that I clicked on my screen where this thing will not go away. HP audio switch. What did I click or hit for this switch to come on here? I don't understand this. Oh, I have to start my computer all over again because I'm not gonna be able to see the mouse with that thing in the way. Yeah. All right. Whoever asked about the mouse, because I don't want to restart my computer. If you message me afterwards, I'll send you the video. You should have the video explaining how to use the mouse, but I have something on my screen in the bottom right hand corner of my screen that won't go away. It's blocking the probability indicator and it's blocking where the mouse would pop up, so I can't see it. And I literally cannot figure out how to get this off my screen. I mean, it doesn't matter what screen I'm on, it's just sitting there. What this is, it is pissing me off. Yeah, I don't know. So I can't go over to mouse right now. Get back to this. Yeah, I'm sorry, but it just will not come off my screen. All right. Let me look inside the chat though, see if there's anything else I can go over. When are you going to post this training? I'll post it when it finishes uploading. All right. Sometimes it takes a while. Sometimes it's real fast. It just depends. But it'll be in the Telegram. What is the name of the red and blue chart switching indicator? It's called. What is the thing? What is it called? I don't know what it's called. It's called Trade Station Core. That's what it's called. This indicator over here, Trade Station Core. If you have the JVE system, it comes with that, and it comes with Boss Money. If you have the Boss Money template as well. All right. So here's an example of us dropping right here. So look at this. See, high, low, breakup structure. Next phase, we are tricking sellers into selling, probably back into an area of support. For that. Same thing. All right. But yeah, whoever asked about the timing, I usually try not to enter trades before the New York Open or the stock market open at 9:30, mainly because of the spread. Because if I'm wrong, then I'm twice as wrong. But usually the spread will go down to around 197, depending on what broker you have after 9:30. And a lot of the times, the market open is a liquidity grab, just like you saw today. You know, on US 30, right at market open, and like a dumbass, I'm still mad at the end of this trade here. But where was it at on US 30 today? So you have like this, and I don't know if it was market open. What is market open? All right, so market open didn't really do it. Didn't really pull back that far. Market open. So today was an exception, but let's see. Was this? Yeah, so we didn't get that. We didn't get that crazy pullback at market open today, but usually we do. We'll get like a liquidity sweep at market open, and we didn't really get that. We kind of got it right before market open, but a lot of that had to do with news. Look at it on the 15-minute time frame. Let's see what this time was. Yes, that was after market open. So, all right. So an example, right at market open, you would normally get something that looks like this. You'd be in the buy already because you entered down here, right? And then usually at market open, what happens is you're buying, and you're right back where you entered because the market open is usually a liquidity grab. So you're right back where you started, and then the market goes up. So if you're trailing your stop loss, it'll stop your trail and keep you out of the trade. Reason why we didn't get that today is because of all the news events today. A lot of news was pushing price before the stock market even opened today, which is another reason why I didn't enter right here. And then, right here, like I said, after the FOMC news, I believe around 10:30, it came right back and swept liquidity below and then went up. So you're going to notice that happens quite a bit. You could literally sometimes, wait at 9:30, and if the market looks like it's bullish, right before it continues to go bullish, it's going to go bearish. You can literally just take a sell and get 300-400 points because it's always going to reverse on you at market open, and then go in the direction it plans to go in. So just kind of keep that in mind. But 10 usually I'll wait for some form of a liquidity grab or a setup after the New York session, or not New York session, the New York stock market opened, and then get into the trade. But a lot of the times, your setups are there at 8 o'clock. It's just, do you want to deal with that spread leading into the New York session? But today would have been perfect because you could have entered right here and you would have been in this bad boy from the get-go. And I saw it, didn't take it because I was too chicken. But, and it's weird. You're going to notice a lot of the times it's there. Even on this day, right? Even on this day, right before New York open, before stock market open, market. You hear me? Right, right in this area right here, the market shoots right up before the stock market even opens. Right, there's your entry right here. It's just how strong do you feel about your analysis? Because if you look at it, these are open orders, these are closed orders. We're in an uptrend, right? Money, 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 money. There's a reason for it to go up. If you can enter here before, what is my computer doing? Right? If you can enter here before the market opens and trust your analysis at stock market before 9:30, then all the better. It's just I hate being in drawdown with a 397 spread. So, but that's that. All right. Let's look inside the chat. Do you see it heading to I don't know what pricing you're talking about. Wherever that said he'd see it heading somewhere. I don't know what asset you're talking about because US 30 is not those prices. But yeah. Let's see. Can you show us the loss? Your AUD, please. All right, I'll do one more. Somebody asked for GBP AUD. We'll do one more of those, and then we're gonna call it. I'm starving right now. All right, so this is where the GBP. Where is it? GBP AUD. Do I even have that? Oh, it's way down here. All right, let's look at this. Gosh, this thing is like sideways. Let's see where it took money at. All right, so if I can draw that, I can say we're bearish. I can say we took money from some people over here. It's fine. This is lower low, lower high, lower low. The lowest points is here. These are closed orders. We've been going this way. Let's go to the 1 hour time frame. Jesus, that's a big difference. All right, so we had a closed order here. This is all closed. That's closed. Lower low, lower high, lower low. So right here, we close orders here. Let's go to the 1 hour time frame. All right, so this is the beginning of New York session. We know all these orders are closed, so we know open orders are below here. Above here. Above here. And all the way here. But the market was making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. So we know what phase this is just based off of this. We know we're in a pullback, and we know that we're in the phase of the bank creating liquidity by tricking buyers off of an area of support. On my computer, I got no internet right now. My internet is not working right now. All right, so there's an area of support right here. That's why we're bouncing. You see the yellow line. And then we'll go to 15-minute time frame. All right. So where are the open orders at leading into New York session? We're right here. I honestly would say to be here before New York session if you're trading. Well, this is GBP AUD. Why are we looking at New York session? But whatever. All right. So these are the open orders. We came down below. We closed these orders below here. So where this green line is letting us know that everything inside this area is a closed order. We had a push to the upside. So this is a closed order. This is an open order. You can put an arrow here above that high. We came down. We failed to break this low, right? So I don't know. It depends on when you came to the chart, but 15-minute time frame, money, money, money. What are you going to do? Draw a trend line, right? There's your trend line. We know that we didn't break below this low. So now it's all about how do I get into the trade to trade towards these orders? What do I see? And honestly, I see a push to the upside. I see a push to the downside. So here's your entry right here, really. If you're entering on the 15-minute time frame, right? And then once this pulls back, that creates an order above this wick. And as you can see, we go up and start taking out orders to the top. But you have to remember that this is a pullback. So we cannot trade like we're coming up here. We have to remember that we're in a pullback. The only way to, trade above to get to up here is we'd have to start basically trading within and respecting this area of support where there's rejection, rejection, rejection. We need to start, respecting this area of support, which we didn't, which obviously would probably be news, but we have to remember what direction the market is going in overall. And if I go to the weekly, we're in a downtrend. See, we're trending down. We didn't break above these highs. That's why sometimes the weekly is good to be on as well. All right, we've been making lower lows and lower high. This is just a pullback. The only way we can get into a buy is to get above this level. To get above this level, and we're nowhere near that level. So that's the reason why we could buy, but just not long term. So I mean, that's how I probably would have saw. The New York session for GBP AUD. Maybe we should have did it for London sessions as it is a GBP pair, but it did move during the New York session. It actually moved 50 pips. If you missed this entry, I mean, there was a more prominent one here, right? This closing order. We did pull back. We never broke below this trend line. So this becomes an open order. He had an entry here. And, you could trade to your open orders. Remember what I said, too. This is what I mean by, like, how tedious this is. The top of this candle, not this one, that one is this black candle is your open order. So you can have made that your take profit. And look, to the wick. See what I'm saying? To the wick. If you'd have entered here or here, just depends on when you come to your chart. And think about it, too, is if you see all this bullish momentum like this, then it's too late to buy. if you try to buy in between this in this push phase, you're getting caught in this because you have to be logical. This, it's not going to happen twice with a bunch of bullish candles. It's just not going to happen twice. So you know a pullback is coming, especially if this breaks above any type of structure. And on the 15, on any type of break above a wick is a break of structure, believe it or not. Right. So just keep that in mind too. When you're placing the trade, if you see a candle like this, don't buy this. It's too late. Don't buy this candle. It's coming back eventually. All right. And then if you can draw a trend line, which I'm not a fan of trend lines, but with this I am, because it keeps you from trying to sell for no reason, because the line has to be broken for you to sell, and it's rejected, and you know where it's rejected, and you know where the money is once it rejects here, plus the money that you spotted when you analyze the chart. So, but like I said, that's your quick scout. Like I said, you have to know that this is low probability. We are going against the trend. We're not reversing. It's clearly a downtrend, right? We just happen to run back into resistance. And now the bank had a reason to come and take out all the open orders below. So, like I said, it's all about what type of trader you are. If you're someone who's going to be an intraday trader, during New York session or whatever, then you got to trade this mess. If you're someone who is a swing trader, then you have to analyze this stuff on the higher time frame, right? And start looking at it from a big scale, right? Because then we could clearly see that this was an open order, this is an area of resistance. Market's going to pull back to that, and then we'll trade towards the open orders that makes sense. But that's a totally different animal. I'm not even one to hold trades like that. So, and GBP AUD is not an easy pair to trade, so I've been told. So, but that's GBP AUD. Hopefully that helped. I've done enough examples. I'm not going to do one this session. Whoever asked that, I'm about burnt out. But hopefully you guys got some value out of this and got a better understanding of how the market works. If I were you, as homework, is I would just go to your chart and start marking up these charts. Marking up your breaks of structure, your RTDs, and then doing your top-down analysis using the open order concept, and just kind of back test it, kind of see, do your open orders get taken out? If you have trade view and you can do that, where you can back test and kind of, pick an area in the market in the past and do it that way. That may help you with your confidence, but you could clearly see once you identify the open order, the bank is going to come and take out those open orders. All right. But that's it, guys. I don't know if there's anything else I can go over today. That's about as thorough as I can do it. All right. Gold is dropping. All right. And I can tell you why gold is dropping. You just broke structure. As a breaker structure. Yeah. Took money from sellers. It's gonna drop. Back to support. All right. That's that. All right. I'll ask one more time. Does anybody have any questions before I hop off here? Not for another example, but does anybody have a question other than the mouse? I'm going to send whoever asked me that. If you text message me, I'll send you the video of the mouse. No questions? Going once, going twice. Look inside the chat. All right. All right, then that's going to do it for us, guys. Hopefully you guys got some value of this, and I'll see you guys next week. Have a good one. I can't even end the session with this thing in the way. It's crazy.